Four stocks I'm thinking of buying this week. Like many of you, I put money on the market on a weekly basis. So every single week, I'm either looking for new investments or old investments that I want to increase my overall exposure into. And right now, the market has been pretty crazy. So I'm just adding into my current investments in companies that I believe are looking super good for the long term of things. I know things are looking a bit scary, but remember that long-term mentality where sometimes the best time to buy is when things are looking really, really bad. And I do believe the prices right now are ones that we are going to be super excited in the next few years that we purchased around these levels. So here are the four stocks I want to take a quick look at. If this is your first time, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. All right, so if you guys have been following me, you know that the semiconductor industry is my favorite market. And for two main reasons, right? That is where my education comes from, and that's also where my previous work experience has been in. So the semiconductor market, I do believe, has taken quite a hit, and for the next few weeks, I feel like at least two companies will always be in the semiconductor industry because right now they are sitting at very attractive prices. All right, so the first stock we're going to take a quick look at is Qualcomm, ticker QCOM. Right now we can see this has a dividend yield of about 2.15%. So it's a profitable company and it also pays a dividend. But this is also a really nice growth stock. For those not familiar with Qualcomm, this is mainly known for its mobile chips. And I believe, unfortunately, the company is still known as a mobile company, and for that reason is kind of being priced as one. And we're going to see in a bit, this is so much more than that, but I do believe that kind of uncertainty from analysts and other people that don't really follow Qualcomm are giving it a very, very strong price entry point. We can see on Friday it did close about 5.75% down, and from its all-time high, from its 52-week high, the stock is down over almost 26%. If we take a quick look at some metrics, EV to EBITDA ratio forward for Qualcomm is 8.4. I do believe this is extremely cheap, and again, this is one that's looking very, very attractive at these price points. The company's most recent revenue grew at 41%, and they just reported earnings about a week ago. So this is a company, a semiconductor market that is growing at over 40% at the moment, but is being priced like a company that is going to go away in the near future. This is a player that focuses a lot of their revenue from the handsets, right? We can see the handsets make a good portion of total revenue, and that was up about 65% year over year. But they do have things in IoTs, which I do believe is great for things like robotics, and that was up 61% year over year. The automotive market is super, super small, but this is one that they are increasing their market by recent acquisitions, and that was up 41% year over year. Some final thoughts on Qualcomm. Their automotive market, like we saw, was super small, but they have design win pipelines of over $16 billion due to the numerous wins they have right now. Like I mentioned, right now, mainly a cell phone and handset revenue machine, but they are increasing their solutions in other markets, and we're going to start seeing their chips in more than just phones.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video.
All right, the second company we're going to take a quick look at is Taiwan Semiconductor Manufacturing. We can see this one is traded on the ticker as TSM, and for those not familiar with TSM, this is a company that manufactures the chips. So if Qualcomm needs a chip design, they could go to Taiwan Semiconductor and be like, hey, here's our design, can you just manufacture this chip over and over and over so we can send it to our customers. From its 52-week high, the stock is down over 33.9% at the moment. On the Friday, which was horrible for most investors, it was down 2.4%. Right now, we can see this is a company that also has a dividend yield of about 2.05%, and it is one that it is profitable with a positive PE ratio. If we take a quick look, this is another EV to EBITDA ratio sitting at 9.5 at the moment for forward. And we can see, I do believe this is, again, another attractive price point for a semiconductor market that it is growing at impressive levels. If we take a quick look at their most recent revenue, they grew 36% year over year. And they're seeing huge growth in numerous markets, right? They're seeing huge growth in their HPC market, up 26% most recent quarter compared to previous quarter. And that is now their number one revenue by platform. The smartphone is still pretty strong. So even if consumer market, let's say consumer market is slowing down, HPC can kind of offset a bit. And once consumer market starts to pick up, I do believe this is going to be sitting at very, very attractive levels. We can see automotive market is also growing 26%, but it is a small portion of this total revenue. So TSM, Qualcomm, two semiconductors in my portfolio that I do believe at the moment are must-haves for valuations, for dividend, for growth, and just because of the overall future growth catalyst for both companies. Now the third company, this one's going to be outside the semiconductor industry, but I do believe it's still big with tech. Right now, it is Unity Software. We can see from its 52-week high, the stock is down about 66.98%. Not a profitable one at the moment, not a one that pays dividend, but it has a market cap of about $20 billion. I do want to say for all the solutions that Unity provides, I believe $20 billion is super, super cheap. If we take a quick look at kind of metrics, we can see its forward price to sales ratio is about 10.13. I do believe now valuations have pulled down to a price point where this is not ridiculous. A price to sales of about 10 for a high growth software company, in my opinion, is not ludicrous. It might still be somewhat high, but I want to say Unity is a form of leader. It is kind of a big market shareholder in its space. So even though that 10 is a bit high, normally in the software space, I want to say you normally want something below 10. But because it's a leader, I do believe it's okay for maybe some form of extra kind of expensiveness on its valuation. I mean, one of my favorite things about them is they do have simulation. You can kind of do simulations on their software. Robotic simulations is a great example, and I do believe automation is becoming a huge player in not just the driving market, in things like distribution centers for e-commerce stores and delivering system for food delivery and maybe kind of like e-commerce delivery, drones, automation in manufacturing, and automation in kind of more like home stuff as well. So robotic simulations, robotics in general, I believe is a huge market. Robotic simulation could be a big player there. We can also take a quick look. Unity is mainly a company that makes money from the gaming segment right now, and they on March 16th of 2022 they did give a gaming report. They see that more creators are making more games, and they have 31% more creators in Unity compared to same time to 2020. Additionally, there were 93% more games on Unity platform in 2021 compared to 2020. So they're growing more games in their platform. They're also getting more creators. If we take a quick look at their most recent full year of 2021, $1.1 billion in revenue, up 44% year over year, with guidance for the upcoming year to be about 34 to 36% year over year growth. Again, when we start to see this kind of growth rate, a price to sales ratio of about 10 does not seem ludicrous, like I mentioned earlier before. Now the final company is another growth stock, and again, it's nice if we have those big players, those big mega caps in our portfolios. I enjoy having them. I have a nice amount. But right now, I do believe it's time for getting into, especially if I have more of this dollar cost averaging mentality. So we can see Shopify right now, ticker SHOP, down about 74.75%. This has a company with a market cap of $53.74 billion. In all honesty, in I want to say in 5 to 10 years, I can't see why a company like this, I've used their solutions. I've done the research as a consumer, and their solutions are unmatched by anything in the market right now. If we take a quick look, another price to sales ratio, right now forward price to sales ratio is sitting at around 6.7. Again, great entry in my opinion for a great leader in its market. They are expected to report earnings on May 5th of 2022, so I most likely will be doing a video on that. Finally, if we take a closer look at their most recent earnings, revenue grew about 41% in their most recent quarter. Subscription solutions grew 26%, merchant solutions grew 47%, and their monthly recurring revenue grew 23% year over year. We are seeing competition from Amazon out there. I do want to say Amazon probably provides similar solutions to certain customers that want to use certain tools for Shopify, but Shopify is pretty much a toolbox. So even though there might be competitors out there that might share one or two of the similar tools, Shopify has a full toolbox that I want to say there's no true competitor at the moment with the kind of all solutions they provide. So those are the 4 stocks that I'm taking a quick look at this week. Let me know, are there any stocks you are taking a quick look at right now and looking to increase over time? Take care, have a good day, and see you next time.